Good morning, everyone. I'm Nadine, and I'm here to give you today's trading notes. For the U.S. markets, the major indexes finished higher after the U.S. government, Pfizer, and BioNTech struck a deal. The U.S. agreed to pay the two companies a total of $1.95 billion for 100 million coronavirus vaccines should it prove to be safe and effective. Meanwhile, the Republicans are looking to extend the current unemployment benefit of $600 per week to $100 per week until December. The current benefit expires end July. Moving on to the local market. The market currently lacks buying catalysts to cause a sustainable rally. Watch out for the major support at 6,000 since risks are still to the downside for the country in the absence of a working vaccine. Meanwhile, gold nears record while silver is at a 6-year high. Our view? Precious metals are surging as we see continued flight to safety from investors as the pandemic worsens. Precious metals are considered a safer store of value amid the looming global recession and as currencies get devalued and as real yields fall as a result of interest rate cuts. Gold soared to almost a 9-year high while silver is at its highest level in almost 7 years. Some of the listed companies that can benefit from this are APX and PX. Moreover, the country recorded a budget surplus in June of 1.8 billion pesos, bringing the year-to-date deficit to 560 billion. The Philippines saw a reversal from 4 consecutive months of budget deficit as revenues jump 50% while expenses grow 26.7%. Our view? The surplus for June can be attributed to the higher income tax collections as the government extended the deadline from April 15 to June. The reopening of businesses also gave additional boost. We expect the budget deficit to widen moving forward as the government ramps up spending to mitigate the adverse impact of the pandemic to the economy. With constrained business activity, surging unemployment level, and low consumption that leads to business closure, tax collections will likely continue to decrease, which means that the government needs to borrow more to fund its expenditures. Meanwhile, the country's foreign direct investments plunged to $311 million or negative 67.9%, bringing the year-to-date figure to 1.98 billion or negative 32.1%. The BSP downgraded its year-end FDI projection from $8.8 billion to $4.1 billion. Our view? The lower FDI is not surprising as companies tend to postpone expansion plans amid the pandemic. We expect this trend to continue with the pandemic worsening in the country as it is likely that business activity will continue to be restricted. On a positive note, the proposed CREATE bill, which intends to immediately cut the corporate income tax rate from 30% to 25%, can improve sentiment. That wraps up today's market outlook. Join us again tomorrow for your daily trading notes. Stay safe!